All right, let's just dive right into it. Today, we're unraveling the hidden architecture of modern capitalism. Some economists actually call it an invisible empire. And we're going to look really closely at the two titans sitting right at the center of it, Vanguard and BlackRock. Now, you've probably seen these names, right? Maybe passing by on your 401k statement. But in this explainer, we're going to break down exactly how they operate, how they got so incredibly massive, and why understanding this underlying machinery is absolutely crucial for every single one of us.
So I want you to try a quick thought experiment. Imagine waking up tomorrow and discovering that a tiny handful of companies quietly own pieces of almost every major corporation on Earth. I know, it sounds a bit like the plot of a sci-fi novel, doesn't it? But actually, it's our daily reality. We're talking about financial giants whose influence literally stretches across the entire globe. And you know what the truly fascinating part is? They don't manufacture any physical products. They don't sell smartphones, they don't drill for oil. Yet their presence is absolutely everywhere.
And when we say they own pieces of almost everything, we literally mean everything. Just think about a normal day in your life for a second. The bank that holds your checking account, the airline you took on your last vacation, the technology giants manufacturing the very device you're probably using to watch this explainer right now, the pharmaceutical companies making your medicine, the media networks you tune into, the energy grids keeping your lights on. Yeah, they are major shareholders across that entire spectrum.
The sheer scale we're dealing with here is staggering. We are talking about tens of trillions of dollars. Not millions, not billions, tens of trillions managed by just Vanguard and BlackRock. To put that kind of massive number into perspective, that is actually more wealth than the gross domestic product of most nations combined. And it's all flowing through just two corporate headquarters. Honestly, it's a number so huge that the human brain kind of struggles to fully comprehend it without stepping back and really thinking about what that much capital represents.
You know, for most of human history, wealth was incredibly easy to spot. Kings owned vast tracts of land. Industrial tycoons, well, they owned physical oil fields, railroads, and massive factories. If you had power, everyone could see it right there in the physical world. But today's reality is entirely different. Ownership is networked. It's hidden deeply inside these complex financial markets, where asset managers hold millions of shares across thousands of different corporations, all at the exact same time. It's an empire built on diversified data, really, rather than physical dirt.
So how exactly did we get here? Well, before the 1970s, investing was kind of an exclusive, expensive game. You needed professionals actively picking individual stocks, just hoping to somehow beat the market. Then, boom, the index fund comes along and fundamentally changes the rules. The revolutionary idea here, which was really championed by Vanguard's John Bogle, was that picking individual stocks is essentially a loser's game. Instead of trying to beat the market, why not just own the whole market? Fast forward a bit, and BlackRock aggressively scales this concept into institutional management. And today, those early billions have snowballed into tens of trillions, completely transforming the financial system forever.
But here is the ultimate irony of this whole invisible empire. This monumental wealth isn't actually their money. It flows directly from everyday people. It's your retirement account. It's your city's pension fund, university endowments, standard insurance policies. Vanguard and BlackRock are acting as the managers, the stewards of these funds, not the outright owners of the capital. So it's really just ordinary citizens saving for the future, collectively pooling together into this unimaginable financial force.
And this leads us to a pretty profound realization. This dominance, it wasn't achieved through some deep, dark secrecy. It was achieved entirely through scale. There was no shadowy, smoke-filled room where some master plan was hatched. Nope, it happened purely through the unstoppable momentum of index investing. As more and more everyday people wanted low-cost, diversified investments, more and more money relentlessly flowed into these funds, scaling them up to historic, truly unprecedented levels. Now, this massive scale creates a fascinating phenomenon that economists call common ownership. This happens when a single asset manager holds huge blocks of shares in competing firms at the exact same time. Imagine sitting at the head of the boardroom table for Airline A, Airline B, and Airline C simultaneously. Because index funds have to mirror the entire market, they don't bother picking winners, they just buy them all. It creates this vast financial spiderweb, connecting thousands of fiercely competitive businesses back to the exact same source of capital. Okay, but beyond the shares they manage, there is a powerful technological engine driving all of this. We need to talk about BlackRock's real secret weapon, a platform called Aladdin. You can think of Aladdin as essentially the digital nervous system for global finance. It's this highly sophisticated risk management platform that acts as the central processing unit for trillions of dollars. Every single day, it processes enormous amounts of historical and real-time financial data to map out exactly what is happening in the global economy.
So, what exactly is Aladdin looking for? Well, it's constantly monitoring massive systemic threats across vast financial networks. Imagine a severe supply chain disruption in Asia. Aladdin models how that instantly affects a tech stock in California, while simultaneously evaluating sudden interest rate hikes, credit risks, and extreme market stress scenarios. And while very few everyday consumers even know it exists, major banks, insurance firms, and asset managers worldwide rely heavily on it. Its analytical power deeply impacts how global markets understand and react to potential threats.
Naturally, seeing this staggering level of scale sparks a lot of wild headlines, claiming these firms secretly control everything. But to be objective here, we really have to separate absolute operational control from real influence. Absolute control means owning the assets outright and running the day-to-day operations of a business, hiring, firing, designing the products. They don't do that. What they do have is real influence, acting as the powerful stewards of client money and exercising the voting rights attached to millions and millions of shares. Let's break down exactly what that influence looks like in the real world. As major shareholders, their proxy votes can completely shape critical corporate governance. When a major corporation suddenly shifts its environmental policy or maybe restructures its executive compensation packages, it often isn't just because of public pressure. It's because these massive asset managers cast their millions of proxy votes in that direction. They might not sit in the CEO's chair running the daily ops, but make no mistake, they have a permanent, incredibly powerful seat at the boardroom table.
And that brings us to the core thesis of this entire explainer. The real systemic risk, the thing that actually keeps economists awake at night, isn't about malicious domination. It's about concentration. It's not about some cartoonish supervillain takeover of the world. It's about the very real vulnerability that emerges when the vital pipes of global finance all route through the exact same, incredibly narrow points.
Which leads us to a fundamental question. What happens when enormous amounts of capital flow through a remarkably small number of institutions? When the entire global economy relies so heavily on the architecture of just a few massive entities like Vanguard and BlackRock, we really have to interrogate the fragility of that setup. What are the blind spots when so much weight rests on so few pillars?
And building on that thought, what happens if these institutions, maybe using similar data or relying on the exact same risk management platforms like Aladdin, decide to make similar decisions at the exact same time? History teaches us that in vastly interconnected networks, parallel decision-making can trigger massive systemic effects. Think about a flash crash, right? If an algorithmic alert causes everyone to rush for the exit at the exact same moment, the entire structure of the market is tested like never before.
Now, collapse isn't inevitable, but surviving and thriving in this new era requires a completely new understanding. We simply can't manage risks that we can't see. We have to map out this highly connected network. We need to recognize how this invisible architecture determines our systemic resilience, and deeply realize that resilience is basically the only thing that ensures the system's survival in times of crisis.
Ultimately, the story of Vanguard and BlackRock is really the story of a profound transformation in how global capitalism actually functions today. Just think about the stark contrast. In the past, we had highly visible ownership, localized markets, and a real culture of individual stock picking. Today, the present is defined by networked ownership, massive global capital flows, and highly automated investment systems. It is just a completely new, interconnected era of economics.
And it brings us right back to this reality. Every single day, billions of dollars continue flowing through the invisible machinery these firms help create. Whether you view these firms as highly efficient market builders who miraculously democratized investing for the masses, or maybe as symbols of a dangerous financial concentration, well, their daily impact on our world is an undeniable reality. They haven't just participated in modern capitalism, they have fundamentally reshaped its bedrock.
The machinery is already running. It's steering your retirement, your banks, and the entire global economy. The question is no longer whether we can put the genie back in the bottle. The real question is, are you willing to remain in the dark about how the architecture of your own world actually works? Because in modern finance, ignorance might just be the greatest systemic risk of all.